Trending closer to home, Stats Canada has released its latest inflation numbers, and it's not good news. Canada's inflation rate rose to 3.3% in July. It comes after inflation had tumbled to 2.8% in June. According to economists, the new increase spells bad news for the central bank. Manisa Danabalan joins us now live with the latest. Hey, Manisa.
Hey, Kelly. Forecasters say the latest report raises the odds of another interest rate hike next month. Canada's inflation rate rose to 3.3% in July. While there was a glimmer of hope for Canadians when the pace of consumer price growth slowed a little last month, it was short-lived.
This kind of movement is kind of typical noise for month-to-month movements, so I wouldn't read a heck of a lot into that. You could get that kind of movement just by oil and gasoline prices being different 12 months ago. So it's not that's not really a big thing.
Statistics Canada says the rise in inflation for July is mainly due to gasoline prices.
Last month's number was pulled down because gas prices had fallen so much over the previous year from the big spike we had in June 2022. Now that effect has kind of worked its way through, and we're now into a more kind of stable holding pattern. A spike in electricity prices in Alberta last month is also one of the key contributors. Between June and July, rates almost doubled to 11.7%. Another big factor is mortgage interest costs, which posted another record year-over-year increase in July, rising by 30.6%. Meanwhile, grocery prices rose 8.5%, slower than June's 9.1%, and that's largely due to a smaller jump in fruit and baked goods.
Some things have gone away. That's why we got down from 8 to 3. Like the effect of the Russian invasion, prices haven't come down, but they stopped going up.
While we've come closer to the Bank of Canada's target inflation rate of 2%, there's still work to do.
There's still a lot of accumulated savings from COVID. Okay, during the lockdowns, people couldn't spend. And so there's still a lot of money sloshing around. People are spending. And when people spend more, prices go up.
The latest interest rate hike was in July, when the Bank of Canada raised its key lending rate to 5%. And a BMO chief economist says these inflation numbers will cause some anxiety, but he's betting there's only a 25% chance the central bank will raise the key rate again in September.
At about a 1 in 4 chance that they raise interest rates at the next meeting. The main reason why I think they probably will hold off is we actually have seen signs that the economy is starting to slow. You know, for instance, we got a report on Canadian housing today that showed a slowdown in sales, some cooling off in prices. And more broadly, we have seen signs that the consumer is starting to lose a little bit of momentum, and the unemployment rate has risen for 3 consecutive months.
According to Douglas Porter, Canadians appear to be weathering the mortgage rate hikes pretty well so far.
But there are a couple things to point out. And, you know, the Bank of Canada came out with a study a few weeks ago that showed only about a third or a little bit more now of mortgage borrowers have actually seen their payments rise. Now, keep in mind, you know, traditionally the most popular mortgage is a 5-year mortgage rate. And so a lot of people would not have had their mortgages renew yet. You know, that's coming in the next few years.
The Bank of Canada expects inflation to hover around 3% over the next year before steadily declining to 2% by mid-2025.